Good morning. Today is Wednesday, February the 8th. Time right now in Singapore is 11:10 in the morning. And overnight on Wall Street, it was pretty quiet until the Federal Reserve Chairman's speech at 1:30 in the morning. And basically what he said yesterday was very much the same as what he said last Wednesday, right after the FOMC result. Okay. And what happened in between, of course, we have the Friday non-farm payroll, which was surprisingly strong. And yesterday's interview was actually a chance for him to correct any policy correction that he may actually make based on Friday's very strong non-farm payroll. But however, he basically reiterated what he said last Wednesday. So there was nothing new in his speech, and the market took it as a signal that he is going to maintain the same policies in which there is going to be a pause and possibly a pause for quite a while before he has started to adjust interest rates. But you see, based on last Wednesday's speech after the FOMC meeting, he did not say that he is going to pause. He just said that there will be more rate hike to come. So, but the market was not listening to that part of the speech. They basically concluded that he is going to just pause for a while and then allow the data to catch up with the rate hike that he has done over the last 10 months. So for some reason, the market wants to believe that he is going to pause, but he did not say anything of that sort in his speech either on Wednesday or during last night's speech, but the market wants to go up. So we can say that the market bias is to the upside. So although the market did rally in the immediate aftermath of his speech, the market did not take out last week's high, which is 34,334.7 in the Dow Jones. And we can see that the market, even with last Thursday high, did not break above the December high at 34,342. So basically, we can see that the market is so far as February is concerned, is still trading like an inside bar on a monthly time frame relative to the January trading range of between 32,812 to 34,342. Again, January's price activity, okay, the entire trading range was also the inside bar relative to December trading range of between 32,613 to 34,712. So we can see that there is an inside bar as far as the monthly time is concerned from January relative to December. And then so far in December, we have another inside bar of an inside bar. But of course, we are still very early in February. But if this maintains, we need to see price breaks out of the January high to the upside to 34,342.32, or to break down below the January low of 32,812. Okay, so either way, the market must break out to give us a sense of where it wants to go. So far, the market is just consolidating. So there's no real trading opportunity for now. So we will have to take this into consideration when we decide to take up new positions. Now, the market is obviously more pronounced in the upside for the S&P 500. You can see S&P 500 actually broke out of the January high. It broke out of the December high. So there is this a bit of a bullish bias in the S&P 500, but based on last week's trading range of between 3,037 to 4,195, we can see the market is still trading within the inside range. Okay, so far this week we need the market to break either the high or break below the low. The high refers to 4,195 and the low refers to 4,037. The market needs to break out of this a range-bound trading range before it can tell us exactly what it wants to do. For now, the market have a little bit of a bullish bias. Possibly the market, if it breaks the high of 4,195, may actually go up to 4,264.5, which is my original target. Now, based on the Nikkei 22, based on the Nasdaq 100, we also see that this month high is already higher than this January, which is also higher than December. So basically the same thing happening. What we saw in the S&P 500 is very much what we see in the tech stocks relative to the Nasdaq 100. So yesterday we had the kick up, but again, this rise last night came very late and did not manage to take out last week's high at 12,800. 1,280. Okay, so again, we need to see market breakout of this trading range between 12,000 to 12,880. So unless the market breaks out either way, it is going to be very, very difficult for us to pinpoint as to what the market wants to do. But remember, this is a three-wave rally. It's almost possibly the tail end of this rebound if it's just a rebound. Okay, unless the market accelerates to the upside, then obviously we will have to relook this corrective rebound scenario. Okay. Over in Asia, we can see Hang Seng maintains a very tight trading range since it opened with a gap down to the downside, and it has been trading within a very, very narrow range since Monday, and today is no difference. Today there is no impetus to kick the market either way, so we can see that the market is consolidating. But what we want to see is that from a high of 22,700, this pullback, okay, from January 30th is a three-wave affair, meaning to say that this is, for the time being, can only be categorized as corrective, okay, meaning to say that the market has still the possibility of a kick up higher, but remains to be seen. Although the one thing that's working against it is the fact that it has broken out below the support line here, which it has maintained since last October, which could be significant in to a certain extent. So we will have to see. Again, it is uncertain which way it wants to go. So far, it has been very productive, but the fact that it has taken out this near-term support should signal to us that possibly the market either will go into a period of consolidation, or it has already peaked and getting ready to resume its larger degree downtrend. Okay. Over at the Shanghai, we see basically very much the same thing. We have a three-wave rally, which peaks so far on January the 30th at 3,310. But again, this structure looks a little bit incomplete to me, because my ideal target is somewhere between 3,375 to 3,468. So there is still the possibility, because so far it is also a three-wave pullback from the high of 3,310, and it has basically been supported by this range of prices here, which I've highlighted between 3,212 to 3,223. So far the market has actually sit on top of this suspected demand area, and the market seems to be bouncing off. So again, it is too early to say whether this is all that it can do and it's getting ready to charge higher. Okay, although the possibility cannot be eliminated at this point in time based on the price action. Okay, then we look at the Nikkei. Nikkei has obviously come off. Again, this three-wave rebound looks a little bit more aggressive than I like. Okay, but the fact is that this high, if it that's the high for this run at 27,821, is again decidedly lower than the previous one in December at 28,195, which in turn is lower than November high of 28,502. So we can see a series of lower highs, and this seems to be the pattern. And if this market broke out of this very, very near-term support line, and if this could be meaningful, because this morning's slide on the relative basis is quite large. It has already covered this gap here, and we may want to see further losses in the days ahead. Okay, over in the FX market, we can see dollar reverse direction after hitting 132.90 on Monday itself, and this move here was basically already happening going into the New York session, but the market accelerated to the downside right after the Fed chairman spoke last night, and the market went down to 130.47 before it started to rebound again this morning in Asia. So far this bounce here from 127.21 can only be seen as a three-wave corrective rebound. The market has all the possibility to resume all the way to the downside, but I think otherwise. I think this could be telling us, because of this very aggressive uptick here, the market is telling us that it has a lot of buy orders from this base of 128. Okay, so the market does stabilize and start to kick up. The moment it takes out 132.90 is signaling to us that this market is going to resume higher and possibly will develop into a different bullish pattern. We will have to see that as it evolved. Okay, Euro remains very, very weak, and that means the dollar strength is very much evident in this currency pair here. The market peaked at 110.33 and dropped to 106.70 on yesterday. And right after the Powell spoke, the market rallied, but it was also quite weak because the market came back down almost immediately. So if this market can somehow rally back to 108.50, that would be a fantastic level to take up short. But I think based on the price structure, this could be a little bit more optimistic than I thought. Okay, market may only be able to go up to test a 108. So if prices go up to 108 to 108 half, I think this area here is right for a short on the condition that we get a sell signal. Okay, Aussie dollars also rebounded from a low of 0.6855 all the way into this bracket of prices which I highlighted yesterday, which is 0.6970 to 0.7. The market traded to just under 0.7 and then started to pull back. And I think this is another sign that this market have a three-wave rally and hit a high of just under 70 cents and started to pull back. Now, the market can go higher, possibly. If we will have to see, but so far the gold market has not reacted, so that did not give the Aussie dollars another kick higher, because we need gold prices to start to rally before it can take Aussie dollars on for the ride. But in the absence of a rally in precious metals, this is all the Aussie can do for now. Okay, so there's a possibility the market may just continue to slide from here. The moment it breaks 0.6855, it'll be telling us the market is going to hit lower. Okay. Over in the sterling, we can see prices dropped to 109.60 and then started to rebound to 120, almost 121. Remember yesterday, going to yesterday's trading, I thought 121, 1.21 to 1.2136 is going to be an area of opportunity in which I do expect selling interest to emerge, and it did. Market went up to a high of 120.94 and then started to ease back. So based on the structure here, there is a possibility market may actually attempt one more rally, and if the market goes back to 121.5, that will be another good level to consider to look out for sell signals. Okay, dollar CAD is a bit of we also saw a bit of a pullback right after Powell's speech last night. The market went up to a high of 134.75 and then pulled back very deeply to 133.80 before it started to rebound. But currently the rebound is still below the support now turn resistant again. So we will have to see whether this bracket of prices between 133.70 to 133.95 is able to provide a base for this dollar CAD to kick higher. Okay, so these are the things that you have to watch. Over in the oil market, we can see there was a big run up in oil prices last night, and this is very aggressive. We can see market take out a low, take out January low of $72.45 to $72.25, and then end up with a reversal pattern. This is something that I highlighted yesterday. Unfortunately, I did not go long. I still do not have a position, and the market rallied last night to $77.62, and it's starting to ease back. If market can ease back to $75, that will be a great level to pick up some long position on the condition that we see a reversal signal as the market drifts towards the $75 handle. Okay, over in gold market, like I mentioned earlier on, there was nothing happening in gold market. Market was basically just consolidating, nursing its wound after the $100 price drop from $1,959.75. So the market has this is a massive drop. I think those long orders has already been shaken out of the marketplace, so the market doesn't dare to go in a big way right now to go and buy. So the market may struggle a bit higher. If somehow the market can go up to $1,900, there'll be a great level to look for a sell position. But I do expect precious metal to continue to weaken all the way until April. Okay. Okay, silver is the same thing. Silver actually managed a new low yesterday. This morning at $22.05 before it started to rebound. Again, silver appears to be a little bit weaker on a relative basis, and if it can somehow kick back to $23.35, that'll be a fantastic level to pick up some more shorts. Okay, Bitcoin attempt to rally, but did not quite manage. Again, you can see the timing of this bounce here is also coincides with the Powell speech, where currency start to move, where equity start to move. So you can see that this is definitely a correlation to equity markets, because as Powell was speaking last night at about 1:30 in the morning, this is also where the market starts to attempt to rally. But this rally attempt was very feverish. There was no conviction behind this move here, and market could actually drift backwards. Okay, so far the market has been held just above the 22,560 levels, and we can see that possibly the market may drift back into this bracket of prices between $22,300 to 22,560. Okay, if this level fails to hold, the next area of demand is likely to be just above 20,000 at 20,340 to 20,000. 400. Okay, so between this 200 point price range, maybe this could be the next area of demand. Okay, over in Ethereum, it was a little bit stronger in terms of the rebound last night, but again, it is losing steam as of right now. As we are speaking, the market is pulling back. The current price is about $1,680 for Ethereum. Market is still confined within last week's trading range of 1,995. Sorry, 1,559.60 cents to $1,713.80. So unless the market break out of these two boundaries, it will not be able to give us any new information as to what it wants to do. But on the downside, okay, the market ever drift to what, let's say between $1,005 to $1,536, that could be an area in which demand may actually resurface one more time. Okay, Cardano actually tried to rebound, but again, it has is beginning to show signs of losing steam. Prices actually touch the support and resistance line, and it's coming back down again. As we are speaking, the range, the trading range in which we want to watch will be so far 0.372 to 0.414. Price needs to break out of this range, and on the downside, again, I do expect somewhere between 0.347 to 0.370 to see demand re-emerging. Okay, last but not the least, we want to cover Solana. Solana did manage a marginal low. Now, unlike the other coins, which has still been trading within last week's trading range, Solana is the one with the exception. It actually managed a marginal low this morning relative to last week's low of $22.53. This morning low at $22.52 was a marginal low. Price kick up just after the Powell speech, and it's now coming back down again. So far it is a three wave, and if the market continues to drift lower, somewhere between $20.74 and $21.90, we could possibly see the re-emergence of buying interest. This is all I have for you. In the meantime, today, the only highlight for the day, there's no major economic data to be released from the States other than President Biden State of the Union address. Okay, so not sure what he's going to talk about and whether he's going to talk about anything regarding the economy. If not, I think he'll be talking more on geopolitics and more importantly on the national debt ceiling. Okay, so if there's nothing pertaining to the economy, maybe there will be no impact from this speech tonight. Okay, guys, that's all I have for you. Like I said, I will see you again tomorrow, and in the meantime, be safe. Bye-bye.